You go to the store, swipe your card, and run out with the smoothie. Have you ever wondered how the store owner gets paid? Seems simple, right? What if I told you the merchant gets paid in 2 to 3 days? What if I told you the merchant only gets 97 cents of every dollar you pay? What if I told you there are at least 4 different parties in this seemingly simple credit card transaction? There are 3 different stages in a typical credit card transaction: authorization, clearing, and settlement. Let us look at the handovers in this chain of liability, which illustrates why changes are afoot in the number of parties involved and the speed of travel. In the authorization stage, you walk into the store, swipe your card at the POS terminal, and then the data is sent to the merchant, say Trader Joe's, to its merchant bank, or what is also called the acquiring bank or institution. The acquiring bank then forwards this transaction via the credit card network such as Visa, MasterCard, or American Express to the issuing bank, the bank which has issued the credit card to the customer. This can be something like Bank of America or Chase. The issuing bank then authorizes the transaction and approves or declines it based on the risk of the purchase involved. In the first stage, there are already 4 parties involved, 2 of which are financial intermediaries. Now that the transaction has been approved, how does the merchant actually get paid? The clearing and settlement stage ensures that the merchant gets credited the amount of the purchase minus some fees through this convoluted flow we just discussed in the reverse, starting from the issuing bank. These final 2 steps are what causes the process to be measured in days and not seconds. This explains a few parts of the puzzle. Payment systems around the world are exploding in volume, value, and speed. They are also evolving to attempt to move money faster and at a cheaper cost. Newer payment rails like RTP or real-time payments and blockchain technology are beginning to be embraced by legacy financial institutions in an attempt to make the process more efficient. This may lead to faster payments and fewer parties involved. To find out how existing competitors like Visa and American Express are adapting and how newcomers like Stripe and Square fit into this picture, watch our upcoming videos.